Hey guys, RB here. Happy Friday, and before we go into the weekend, I thought it would be helpful to just have a brief review of where we ended this week and the expectations from the week coming ahead, right? So a big week, a lot of ups and downs with the crazy rally on Wednesday, and then a dip next day, and hints coming from the White House and Trump specifically when to buy, when not to buy. It was pretty funny that way, but again, crazy week how it started on Monday, and then with the rumor, and then with the actual pause, just crazy stuff, right? So now a few things which I've covered in my previous videos, gonna kind of state again for obvious, and talk about the microstructure here on what we are looking at and what I told my team yesterday, right? And what can we expect moving forward? So we have talked about this, that the drop from the top from 61 40 range, that is highly corrective. We were not able to decode this particular leg into an impulse because of the lot of overlap in there. It looked like more or less an ABC, a combination of waves, which is a zigzag. And then on the other hand, this another drop as well looks like an ABC because there was no real fifth leg in there. And my opinion was that we are looking at something where, in particular, due to this tension of tariffs, the C leg got extended. My initial expectation was that the August 2024 lows should be enough, which was somewhere around 51.20 or so, should be enough to make this C close here, so that we have ABC, a bounce back, and an ABC. But this a further extension into 4800 was a little bit too extreme, but still I'm considering this as an ABC, right? So in total, you got kind of a mix of a leg. We simply call it as a WXY, which is a three-wave structure and another three-wave structure, right? So call it there. Now, is this just one leg down, and is there another one coming? I don't believe that as of now. Just because, as I explained before in the previous video, when we were looking at this overall, structure and the rebound from the critical level of 4800, I was saying that we have retraced about 50% for wave 4. That's pretty much acceptable. So this wave 4 potentially has ended here, and I do not really want to see one more leg down. One more leg down will mean we are potentially getting into this lower number, into 4600 or so, or probably 4670 or so. But yeah, I am really not keen in that leg, simply because my count is still impulsive and I want to see a fifth leg up, right? That's one. Second is, I talked about the importance of this RSI level hitting all-time lows where it has always found, be it 2022 or be it COVID crash, went a little below the 2022 level. But if you go back all the way, you will see this level around 2930 is where SPX kind of simply bounces, right? So the bounce came right from there. This bearish divergence is now resolved, and all what we need to know is that simply a basing here, which I think, in my opinion, is going on right now, while Trump is going through his phases of rolling back the tariffs. Now he's tweeting about China being a good friend and the good deal to come out of China and all that. Market is just basically waiting and basing around in this area before the conclusion comes that, okay, there is a pause on China, they're rolling back, or something like that, and then we can have a move up from there. Now, if that WXY was complete here, what I'm looking in a short term time frame since yesterday was after this massive rally on Wednesday. The first opinion that I had was that we had a 1, 2, and this will continue a little bit further with the 3, 4, and 5 closing this gap or maybe hitting there. That did not happen. We got a little bit of a deeper retrace on Thursday. 5300 was my level to hold for the continuation. That did not hold, and we fell all the way. And I shared an update that as long as this demand is holding, because this demand led to the break of structure on this, right from here, right? Then we have an opportunity to continue. This demand was not fully tested today. I was expecting probably there would be another dip in the morning, just coming right here, and we will move for the next leg, right? This demand is still important, and I'll tell you why. Because even if we do not see a dip right away from where it closed on Monday, which means what's happening right now is that I am into my fifth leg already, and that will mean that this was my one, two, three, four. It's a leading diagonal. Don't get confused why four is dipping into the wave one area. It's supposed to happen in a leading diag, and then I get another leg up as my leading diag. I want this gap to be closed in this one, but if it makes a minor high and does not completely close that gap, that's fine, acceptable as well. But as long as it makes a new high, it's my five legs up, right? And once this 1, 2, 3, 4, 5 is up, I still will see one extreme sell-off coming from all the way to this demand zone, right? So probably could be something like this, or could be simply an extreme, as we have seen, extreme legs coming with a very small B bounce, right? But this will happen sometime later next week. So probably, Monday could be a rally going up on some news over the weekend, and then we slowly start cooling off, and then we get final dip. So this demand will be tested again, and if you see, let's just see what level that comes out to be if it goes all the way. So somewhere below 61%, so either 51.41, and below this is 5005. So somewhere in between we have this demand which can be tested, right? So based on how high it goes, does it close all the way the gap, or somewhere just make a minor high and go lower. But again, the point is that this demand was not tested today or yesterday and needs to be tested again, right? So this will come down back here again. And now if you zoom out, this gives you your wave one and two overall. And from here onwards, if you get this structure, you get this dip into back into this demand, this is where you go long heavily again, and you are expecting this rally to continue, right? Make new highs, go into probably 6,800 or so through the year, right? So again, putting some measurements out there. If this is the way it's gonna go, we are gonna have wave one, wave two, and the extension of at least 161% or 200%. Getting into this area 6500, and then a wave 4 retesting these breakout area, and then a wave 5 finally. Now if you look into it overall, from weekly perspective, this is simply my wave 5, right? So like just like this, right? So this is the expectation. This is how I expect this to go. And of course, the primary, case for remaining this valid is that the demand that I just shared holds, right? Which means when we get this five legs up with a 1, 2, 3, 4, 5, closing this gap, and the next leg down is coming, I need this demand to hold, right? There could be other cases as well, which can be even more complex, where you go up, you come down as the demand holds, then you go up once more again to make maybe a flat, and then you sell down all over again. I mean, that all will come into the play, into the conversation and all that, but we cannot predict all that in advance of what's going to happen. We can have a primary, which I just shared. We can have alternates based on how the structures are developing, the levels where it goes up to, and from there we can understand how things are flowing and what makes sense. Should you close your longs, and should you go short or not, or should you just go on sidelines? But this is my primary expectation. So one step at a time. Want to see this five waves complete, and then get a retracement into the demand. That's all what I'm looking at. Next week should be significant enough volatility. Looking at VIX, talking about volatility, still we are in the high 30s, and I was expecting that, with that sell and testing the demand, probably we'll get another high, and that would give me a huge divergence on daily time frames and 4-hour time frames, and that should be it. That did not happen, and it's still kind of, slowly chopping along the wave. So I think once we hit 5600, close that gap 5660, I would expect VIX to just come into this level at 30, and after that, if the sell-off comes and I drop from 5600 to that 5100, 5150 mark, then I can see this as well. And this is gonna be marking all my 5 waves as a hair, right? One, two, a bigger three, four, and five. And after that, I'll be done with this whole move in here. And then VIX can continue to keep dropping, dropping, dropping as we move towards 6500 or so, and we'll see VIX dropping into lower ranges as it did before. Before we had this last spike during August. If you see, once it made into those levels, it just kept dropping and dropping and dropping and dropping into those 12 numbers, right? So similar phenomena is expected once these moves are over, right? So that's about it. Hope this gives you a clarity on what I'm looking at for next week and a little beyond as well. And let's see what happens on Monday. Hopefully, good news comes and we just close the gap above 5600. Thank you very much. This was all for the week. A great week in fact, we were on the right side. We weren't caught into any kind of shots or anything like that. We pretty much stayed on the right side, and things will improve in the next week, and whatever longs I'm holding with SPXL, we'll be figuring it out next week on where to close, and probably on the next day maybe adding a little bit more, and then just keeping them all the way towards the next rally, which I'm expecting towards 6500 and all that, right? So, and with the volatility drop, we'll be back into the options, which have been avoiding for a little bit. For probably 2 to 3 weeks, right? Just because of how the premiums are crazy, and how how the moves are just coming out of the news and all that. So good stuff. All right, take care, enjoy the weekend, and I'll see you next week. Thank you very much. Bye bye.